What's going on, guys? Brian's here. Today is Tuesday, October 5th, 2021, and the market is closed. Jumping right into things, based on the title, you already know that we're going to be talking about the Anchored VWAP, more importantly, the 2-day Anchored VWAP in today's video, which is this magical line right here. Now, I say it's magical because most people don't use it. Most people are not even aware of it. I did a video on the 2-day Anchored VWAP last year, I believe, so I'll leave a link in the description down below about using a few case studies and certain things to look for. In today's video, we're going to be looking at multiple scenarios for today, and I won't be going as in depth as that video, so make sure to check that one out if this is the first time you're hearing about the 2-day Anchored VWAP. Now, you can get this Anchored VWAP if you're using something like TradingView. It's actually a free study. All you have to do is just use the Anchored VWAP tool. Just go to the previous day's open and click on the first candle and then just leave it up. The only downside is every day you have to delete it and then anchor it to the previous day's open every single day. If you're using Thinkorswim, you can use a custom study, which I released last year. I'll leave a link in the description down below. Using that study is the same situation. You'll have to manually change the date. You'll have to come to your studies tab, come to edit studies, and then you'll have to actually open up the study here and put the date in manually every single day, which can be a little bit of an inconvenience. So I also mentioned in that video that a way you can work around it is actually if you just change your time frame to a 1-day time frame, and any any time that you like to trade off of in terms of candlesticks. So you can use a 1-day 5-minute, a 1-day 3-minute, a 1-day 1-minute, but that way Thinkorswim will always only show the previous day's price action and the current day's price action, so inherently you'll get a 2-day Anchored VWAP. Or in my case, I use an algorithm that updates it every day for me. Link is in the description down below for the quant trading app algorithm. Full disclosure, I am a developer on the algorithm, so just wanted to put that out there. Now, without further ado, let's just take a look at some tickers. Right here, we're looking at Apple, and you guys know whenever there's a gap up over the 2-day Anchored VWAP, or actually you might not know if you haven't seen any of my previous videos about this subject matter, but pretty much what we're looking for is a gap up over the 2-day Anchored VWAP, and we want to see it hold at the open. I'll show you guys exactly why when we look at the volume profile and things like that, but for most part right now we're starting with actually Amazon, and then let's jump over to Apple. And let's take a look here. Similar situation. You want to look for a downtrend day, and then you're looking for the gap up the following day, especially at the end of some sort of a downtrend. I'm not going to pay attention to any daily charts or anything like that in this video. We want to keep it to just the intraday time frames because we're looking at multiple examples and I don't want the video to be too long. But here we have Apple, a similar situation, gapped up over the 2-day Anchored VWAP, pulled in, it held it here at the open or the first 15, 20, 30 minutes of the day before pushing up. If you guys notice, I am using the 5-minute time frame. I'm not using the 3-minute time frame. If you've seen the previous video, you can use the 3-minute time frame with the 9 EMA and look for a 9 EMA VWAP crossover, but I want to keep this video to just price action, just volume profile, and just the 2-day Anchored VWAP. Let's jump to another example from today. Let's look at NVDA. Here we go. Clean trade, similar situation again. First 5 minutes, it pushes up, comes back down. It doesn't quite touch it. We'll take a look at some pre-market activity in a second. So that's how you can actually be prepared before the market opens if you're trading options. If you're not trading options and you're trading shares, you can actually take positions from pre-market. Or if you're trading futures, you can actually trade this using the futures from pre-market, which is something that I did. Next, let's take a look at Square. And then one more after this. So here goes Square, similar situation. See, yesterday was a downtrend, and then today we gapped up over the 2-day Anchored VWAP. It held at the open, and then price just pretty much pushed aggressively off of it. And then lastly, Netflix, which was kind of the star of the show today. Netflix putting in new all-time highs, which is just an amazing the way in which it's been really on this bull run. Earnings is coming up, I believe, in a couple weeks, so we'll see what happens. But here we go. Clean price action. It opens, actually holds the 2-day Anchored VWAP, and then it just pushes. Again, similar pattern as the previous day. Now, granted, these are all tech stocks, so of course they're going to all look pretty similar, as well as they're all market stocks, so they will be looking similar to tickers like the SPY and the QQQ. So here goes the SPY. Not exactly an ideal case scenario because the 2-day Anchored VWAP was so far away from it. However, when we take a look at the futures in a second, you guys can see, again, you can be prepared for this from pre-market. But key characteristic here, extremely bearish day the day before, and then we gap up over it. So if we jump back to, let's actually switch over to my Discord real quick and take a look at this. So this is the pre-market section here. If I just scroll up from pre-market, part of the game plan, where was it? Yeah, today at 9:20 a.m. was just kind of always start the day with the futures. So I'll take a look at the ES, and I'm paying attention to where the 2-day anchored VWAP is, which is this level right here. And I was aware of where it was, as well as how this demand had formed overnight. And then we had put in this double bottom from point of control from last week, Friday's pre-market session, which was October 1st. Now, moving right along, what was significant here is that the market had put in a 50% retracement overnight, and it came close to reaching its profit target, but it didn't quite reach it. So that's why I was a little bit hesitant at the open to get in. So I did mention, I believe it was right here, I said if we scroll down here, what did I say? I said if levels break, blah blah. Oh yeah, right here. I said I'm planning to wait for the SPY to see if it'll pull back down to the weekly buy zone. The buy zone is something pertaining to the quant trading app algorithm, so you can ignore that for now. But as long as it has confluence with the ES demand, I want to see the SPY if it can hold its anchored VWAP right here. So if we take a look at the SPY, this right here. So again, ignore the green area. This is straight from the algo saying it's a pretty much a relatively safe place to buy the SPY, buy calls, etc., etc. But what we can see, this is the 2-day anchored VWAP right here, and then this was the previous day's point of control. So already where these are two key levels, and then this level right here is for the algo's buy zone. But you can already see where the SPY was pre-market, so it was pretty far from the level. In contrast to some of the tickers, when we take a look at them pre-market, you'll see they were a little bit closer to the anchored VWAP. But this is something that you want to see whenever you're coming up with a trade idea or some sort of trade thesis. Is for starters, if you're using the anchored VWAP, you want to have some sort of quantifiable way to approach your pre-market analysis, or you want to have some sort of systematic approach every time you start looking at the charts at 8 a.m. or 9 a.m. depending on whatever time you start the day. For me, I like to gauge to see where are we in relation to the 2-day anchored VWAP, and the futures were well over it. Because if we pull into this level, I know it's going to be pretty safe because my stop is going to be right under the 2-day anchored VWAP. If we just scroll right down here, we can actually see how this one played out. The ES pulled right into the demand zones, pretty safe. The gray level is the regular VWAP, and it held, and then ultimately price just took right off, and we ended up pushing right through some supply zones, and we came all the way up to here. By the time it was midday or power hour, just after lunch, the market was already up here. So now if we jump back to the charts, and let's start with we started with Amazon. So let's take a look at this, and again, hopefully you guys are following as I'm trying to make this video a little bit more simpler than some of my more complicated videos, as I'm breezing over a lot, but I want to make sure you guys can be sufficient in understanding pre-market what signs you should be looking for. So why this worked is we just showed we're looking at the futures. The futures held over the 2-day anchored VWAP, as well as they held over a demand zone that was formed overnight, and we had a double bottom from the previous day. All key signs that we're probably going to have some continuations into the following day. Now, if you're a person that doesn't necessarily like to trade the open, or you like to wait the first few minutes, which is the type of trader I am, this is where the 2-day anchored VWAP comes into play, because you don't have to trade this first 5 minutes here, and you can see this pull in. Now, why did the 2-day anchored VWAP hold here? Again, think about this. If you know anything about price action, or if you understand market psychology, right here, the market, or in this case, Amazon, not necessarily the whole market, but it does coincide with the entire market in this case. We can see, look at how long price stayed below this level yesterday. This was from, we'll say like 9:50, 10 a.m. we'll say. Amazon broke down below this level, and it pretty much spent the entire day below it. Now, without even looking at the volume profile, you can already make the assumption that there's going to be a lot of volume that was traded between this price and this price, which would be right here and right here. So 32.10 and 31.75. So why is that relevant for today's price action? It's because you can make the assumption that there's a lot of shorting that was occurring below here yesterday at this price. And if there's a lot of shorting, it means that there are a lot of bears that are essentially borrowing shares and selling them. Now, what happens if price gaps up over their average? Let's just say their average is right here. They're now in trouble, which means their P&L is red right here. And if their P&L is red, in order for them to close their position, they need to cover their shares. By them covering their shares, they essentially need to buy shares, and that's what's going to cause some sort of a mini squeeze. On top of that, it becomes a low risk place for bulls to actually get long, because if you're a bull buying in this area, your short essentially can be below yesterday's low if you want to give it a wide stop if you're looking for some sort of a swing trade. Now, granted, bears have been in control in the macro trend right now, or not necessarily the macro trend, but we'll say the trend for September into October, we have been in a downtrend. So bears for the most part have been in control, but when it comes to this type of price action for this day, this is not the type of activity that a bear would want to see. If we jump over and look at the volume profile, we can see this right here. This would be one standard deviation of all the volume for Amazon yesterday. One standard deviation is just 68% of all the volume from yesterday. Some people use 70% whenever they're looking at their volume profiles. I use 68%, and if you're using this Thinkorswim study, I'll leave the description down below. If you're using this study, it is programmed for 68%, but this right here is saying that this is where the majority of all the shares have traded for Amazon yesterday. And you can already take a look at the profile right here. Do you see the gray area in the background right here? This is essentially the volume, and you can see how the nodes start skyrocketing along here. Please leave any questions in the comment if you're not particularly following or this sounds confusing, but you can see that this slight gray area in the background is protruding out right here, and this is where there's the most amount of volume. This gold yellow line right here is what's called the point of control, so this would be this level right here. But that aside, if we just take a look at this whole rectangle right here, this is where all the volume was traded essentially, or not all, but majority of the volume. So when Amazon opens up today and it opens right at the upper end of this volume, anybody that's shorted below this area is going to be scared or in trouble if it actually starts pushing at the open. The 2-day Anchored VWAP makes it very simple, whereas you don't need to be looking at the volume profile. You can just use the 2-day Anchored VWAP to actually gauge, because the 2-day Anchored VWAP is the volume weighted average price for yesterday into today. And it's also going to account for pre-market activity if you're using a pre-market, if you're using the extended hours turned on. If you're not, it's just going to be calculating all of the volume from yesterday and then the opening print. And that right there, guys, is exactly why this works. If we take a look at some of the other tickers, jumping right back over to Apple, we could take a look at the profile right here. Just zooming in for a second, and similar situation. Apple spent so much time down here yesterday. You can see this is where the rectangle was, and this right here we gapped right up over it, and this is what held, and this is right around where the 2-day Anchored VWAP was. Now granted, there are instances in which the 2-day Anchored VWAP won't work perfect. There's many things in trading that's not 100%. Nothing's going to be a guarantee. In some cases, the VPOC, which would be yesterday's point of control, also known as the virgin point of control, if Apple did sell off to this price yesterday, this would have been a perfect place to go long, because your stop at this level is essentially going to be below this level, and if you're right, you're going to get a huge reward. Usually when the 2-day Anchored VWAP is holding after a gap up on the open, you can use that level, put your stop loss right below the 2-day Anchored VWAP. So in other words, if you go long anywhere in this area here, your stop loss can be right below the 2-day Anchored VWAP, depending on your size or if you want to keep your risk really tight. Now the volume virgin point of control would have been down here. So in other words, if this level did not hold and you took a stop right here, the next best place to potentially look for a dip buy would be right here. And if this level does not hold, your stop loss would essentially be right below here. But either way, either of these trades are very small stop losses, because if you're entering the trade right here or anywhere around here and your stop loss is here, this is essentially your stop loss area. If you buy anywhere around here and your stop loss is down here, this is essentially your stop loss. But if you are right, you're really going to get any type of at least a 3-to-1 type of trade, or depending on your style, again, depending on your time frame, certain traders might be looking for a bigger risk reward. But either way, in which you're looking at this, in this particular case, we got a really big risk reward. Next, if we jump to NVDA, again, we'll go back to the volume profile, zoom in right here. You guys can see the current theme that's going on right here. Here goes the one standard deviation of all the volume yesterday, which is the value area on the volume profile. That's technically what it's called. And if we take a look right here, the NVIDIA first 30 minutes holds right above the level. The 2-day Anchored VWAP was right down here. Perfect place for an entry, because your stop loss will essentially be, again, below the 2-day Anchored VWAP, or you can use this VPOC, which is the virgin point of control from the previous day, as a place to add. Essentially, your last stop, or where you want to cut the trade, is if we get all the way down here. Take a look at Square and see if it's the same thing. Volume profile for Square, zooming right in, you guys can see again, here goes the value area for yesterday. Majority of the volume traded in this range. Square opens up, this is where it opens up right here. You guys can see the 2-day Anchored VWAP. If you remember from before, let's just jump right over. See, it was right here. Beautiful place to be looking to get long. Similar, very tight risk, usually very high reward. And lastly, the really big mover of the day was Netflix. We check the volume profile out. You guys see that right here. Here was the 1 standard deviation, the value area. Look at where Netflix opened right on top of this. All this volume right here that you see, this tick right here, this tick, these are called volume nodes. All these nodes right here is essentially, we can interpret it as a lot of bears trapped below this level, because granted, Netflix's point of control has been pushing and increasingly getting lower and lower, and Netflix is at all-time highs, and there are going to be people trying to top tick the stock. There are going to be people trying to short the stock up here. So this is giving them confidence, seeing that the value area is continually decreasing, which would be from here to here. You can see this value area is decreasing, and then today it opens up and it gaps up right over this value area. That's going to make them very nervous. And if anything, you know about anything about short, and if you know anything about short squeezes, when shorts are covering, price moves very quickly because they don't have time to necessarily sit patiently with a limit order. Usually whenever they're stopping out or they're closing short trades, they use market orders, because there's so much risk involved with whenever you're shorting stocks, especially at all-time highs. Okay, so to kind of wrap things up now, let's just jump over to the futures now on the chart here, and let's take a deeper look. These are some of my levels up. Let's just zoom in. Sorry if it looks a little bit crazy. Let's just jump to here so you guys can see the color, because I'm pretty sure this makes you feel a lot more comfortable seeing the color versus those gray candlesticks. But anyway, if we jump to, sorry, I gotta jump back to this again. Apologize if this looks a little crazy, but whenever I'm drawing out the demand zones at the time, I was looking at the volume nodes and paying attention to where it was really protruding out. And this is the type of things you want to see whenever you're reading the volume profile. So from pre-market, the volume node was pretty high out here relative to where price was. So this is why I drew this out as potential demand. And you guys can see price came right into the potential demand right here before we took off. On top of that, if we take a look at the previous day, you can see this right here is where the bulk of all the volume was right here, just like a lot of the other tickers. So right here, extended out, very safe place. If you remember, this is where the point of control was on the, not the point of control, the anchored VWAP was on the ES right down here. So you can see from pre-market, already being aware of this, if we had pulled down to here, I already had a buy order out to add an extra contract. I only bought one contract, but if it came down here, I would have added one more, and then my stop would have been somewhere below the zone, or I probably would have kept it a little bit tighter with the intention to add at the lower end of this zone. And if that broke, my stop would have been even tighter down here. Next place to get entry, next entry for me would have been somewhere down here. And again, if these levels had broke and they didn't hold today, I was not interested in shorting, because I didn't think the risk reward would have been great as a short. So I would have just stayed on the sidelines unless we broke down below this level, came back up, retraced to it, and then shorts slammed this level. I would have then taken that short. And that was essentially my pre-market plan, or how I was looking to approach the day. You want to try to have some sort of game plan for the day. It's not necessarily a bias, in my opinion. It's more so just understanding where points of controls are, where the 2-day anchored VWAP is, where are your demand and where are your supply zones, because those are some of the most powerful edges we have in the market. And if we jump over to the NASDAQ real quick, we'll see a similar situation right here. Zooming in, here goes our 2-day anchored VWAP. You guys can see this one was even closer to this 2-day anchored VWAP, which is something that I really like to see. Now, I didn't have any screenshots from pre-market, as I do most of my pre-market analysis on the ES, and then I glance over at the NASDAQ. So I probably only spend 2 minutes on the NASDAQ, whereas with the ES, I tend to spend 15 to 30 minutes sometimes really analyzing things there, coming up with the game plan. And if I don't see anything that really looks clear to me, then I just won't bother looking to trade definitely the first 30 minutes for the day. I'd rather sit back and let something unfold, something that I can understand. And I think a lot of newer traders are always constantly trying to predict or trying to guess, or feeling that they need to be involved with certain things, and that's how you get chewed up, because you end up lacking conviction. I know this type of setup works a lot, so that's why I feel comfortable just getting in as soon as we pull into these levels at the open, because I've seen it happen so much. I know there's data backing it, as well. It makes sense on a fundamental level and a psychological level for me. I understand where the bears are. I know when they're on the water. I know when they're in pain that they're likely to cover. And that makes me feel comfortable trading against them. If things don't look clear to me, then I'm more likely going to end up being one of the traders that will just get chopped up or chewed around, or end up taking profits too early because I don't know what's going on. If we jump over and take a look at the profile, just so you guys can see right here, we can take a look at, I'll mark this out for you guys. A lot of volume was traded in this area yesterday. This was our virgin point of control. coming into today, but we can see it was touched overnight right here, so that's why I don't have the V before the point of control right here. We pulled into it, and by the time the market opened, we were up here, but there was already, again, I'm sorry I don't have any screenshots for how this looked during pre-market, but this was already a lot of volume in this area, and we can see that it essentially held because all it did was just came down and it was holding. This is more so if you want to get more of an in-depth look, but again, to keep things simple, you can essentially just look at the 2-day anchored VWAP. Now, if I scroll over just to show you guys how it does not work 100% of the time, just like many things in the stock market, as I mentioned, this right here was last week. This was the right here, the 30th. As I'm hovering my mouse, you guys can see right here the date as I'm hovering around. So this was the 30th, which was last week Thursday. So last week Thursday, the Nasdaq had this triple bottom right here, and during pre-market we were actually holding the 2-day anchored VWAP, which was right around here. So I actually hopped in at the open, and I had a profit target up here, but I was holding, thinking we might have gotten a larger move last week Thursday. And then you guys can see that price ultimately, yes, it held, came back down. This was all the 2-day anchored VWAP right here. It held, pushed, came back down, pushed, it came back down. I was not interested in scalping. I wanted a 200-point move on the Nasdaq. I was looking for a big day, but then ultimately I got stopped out one contract on this pullback here, and then my last contract stopped me out right around here. But you guys can see that saved me from being down a lot of money that day. And in this particular case, the market just did not have the momentum. Bulls were not that strong or aggressive last week, at least at that level, even though it was a great solid plan. Now you can see I ended up taking a very small loss there, but then you have a days like today where it actually gapped up over the 2-day anchor VWAP. If you can see, the downtrend the previous day was not really that aggressive, as bulls did show up during power hour after lunchtime, and then we pulled back and then we kind of just held it. So it was nowhere near as aggressive as this sell-off was, which is one of the key ingredients I've mentioned many times. You want to look for either a downtrend, a really aggressive downtrend, or that sort of capitulation short. You want to come in the next day looking for this type of activity, or you just want to look for a really, really bad day in the market. And bad days, if both the indexes, both the Nasdaq and the SPX, the NDX, if the ES, the ES or the NQs, if the Dow Jones, if all these indexes and things like that are down over 1.7% or something like that, it was a really bad day. Come in the next day looking for this type of setups, and that's what we'll filter out, trying to trade this all the time. Because you can see if I entered this here and I took a stop right here last week doing the same trade here, this is the type of reward. So from a risk reward standpoint, back here the risk was 20 points or so, and then from here the risk, the same 20-point risk, if we talk about from right here, giving it 20 points. In this particular case, we got all the way up to over 250 points. So we're talking about almost like a 1 to 8, a 1 to 10 in terms of a risk reward scenario. So I can take this type of setup every time I see this, 1 time, 2 times, 3 times, 4 times, 5 times, give back 20 points each time, and then catch it once, and then still be up 100% in terms of how much I'm risking. Because if I take 5 losses and then I make 10 points on a win, that's -5 for how many losses, and then when I finally get it right, we're talking about a +10. That's a difference of having +10. So essentially, this was my initial losses, this ends up being my net win. So I'm essentially doubling what I pretty much was risking despite having so many losses, and that's what I mean by 100%, not 100% in PNL. All right, so to conclude, guys, I'll actually just give you guys a glimpse to the quant trading app level. So if we jump back to Apple, I'll actually turn on the algo level so you guys can just see something that's pretty cool here. And if we come to studies, I'm going to go to edit studies. I'm just going to turn this on. QT stands for quant trading. Turn this on, and then you guys can kind of see here the algo is pretty much saying this was a good buy, and we have these levels from Sunday. So the algo is saying anywhere around here for Apple. Now granted, it's been a very volatile week, so a lot of these levels are getting breached, but this adds a little bit of confluence for when I'm coming into a day like today, knowing what happened from the previous day based on the quant trading app algo. That adds a little bit of extra confluence because we already know that this is a good place to be buying Apple for the week, and then it ended up adding that, just that extra edge or extra confluence that sometimes traders need. If we actually take a look at NVDA, you guys can see similar situation here. it was in what we call the buy zone, and this was the 2-day anchored VWAP, so it was a gap up. So it just adds an extra notch of confluence, again, making you feel a lot more safer, and it just brings a lot of order to some of the chaos sometimes that is price action. And then lastly, I'll just show you guys here Square for an example. So Square gapped up, you guys can see consolidated yesterday in the buy zone, and then we gapped up with the 2-day anchored VWAP. So this is kind of very special. It makes things a lot simpler, at least for me. I don't trade with too much on my charts. I just use the quant trading app Algo. I keep my volume profiles up on another screen, as well as I'm always just updating my virgin points of control, and then I pay attention to the 2-day anchored VWAP. And that, in a sense, is a large part of my trading style, and I look for big moves. I'm not interested in micro scalping most of the time unless it's Friday. I'd much rather sit back and be patient for when these types of things align. Now, granted, for today, I didn't catch most of these tech moves. I actually was just long the ES today, and I had to manage a lot of my bigger trades because I've been swinging from last week, some iron condors. That's usually how I play a lot of option strategies. I like to keep my delta pretty neutral or pretty low, and I try to capitalize off of theta. So I did a little bit of managing my trades earlier on today, and then I made sure to catch the ES from pre-market as well as right into the market opened, as I was actually long from the previous night session. So my trading is a little bit different, but just so you don't necessarily catch all the plays, I'm just showing you guys how you can use this type of information. As I've mentioned on this channel before, the intent behind this channel is just not to show you guys all of the trades in which I take, because my trading style is different from another trading style. If you understand the same level of information, there's multiple ways in which you can capitalize off of this, because one trader looking at this, myself included, I might come into today, instead of looking to buy calls, I might actually just short the 225 put and probably buy the 222 put as a hedge and enter in what's called a bull put spread, capitalizing on the fact that if the market was to go up, the puts that I sold will pretty much be worthless, but however, I won't have to worry so much about time decay. So if I'm saying, you know, I'm bullish or I'm long on Square, it doesn't mean I'm just buying calls. But for another trader, they just might buy some calls. Another trader will short some puts. Another trader might enter in an iron condor and then using the strike prices up here and saying it's going to enter into this type of range. So there's so many different ways, and that's the beautiful thing about the stock market. There's so many different ways to trade the same type of action, but just using these levels and using points of control and volume weighted averages, anchored VWAPs, things like that really creates a tremendous edge. So if you have any questions, leave them down below in the comment section. If you're new to the channel, subscribe. If you learn anything, like the video. If you're interested in the Discord, there's a public section that's free. And if you're interested in the quant trading app levels, that's a premium subscription. But in the premium subscription, you get a little bit more access to me. You also get the pre-market action that I post in the futures tab, as well as throughout the day I'm updating on if there's anything significant that I see, and you get access to some of the premium videos that kind of train you on how to use some of these algorithmic levels. So thanks for watching, guys, and I'll catch you in the next one.